Welcome to Epoch Trades, where we trade the new age. Today we're going to be covering higher time frame key levels on Loopring. So, as always, our key level criteria. We want to be looking for swing highs and swing lows, multiple rejections, acted as support and resistance, drastic moves away, obvious to spot, and recently formed. So, at a glance at this chart, we can tell that there's not a lot of data to analyze here, so we're going to do the best that we can. But to start, we notice a swing high here. So let's go ahead and plot that. As always, remember to color coordinate it. And let's drop down to the weekly. So in the weekly we can see a bit more, but there's really not a whole lot going on here, so this is going to be quite easy. Now, we see that our monthly level is just a bit above the candle, so let's go ahead and just fine tune that for our weekly level as well. As we can see, we had key candlesticks forming at this level. We've seen a long wick get rejected. We've seen a very long wick get rejected, followed by a momentum bearish candle, which in turn ascended price all the way down. So before price went up though, we've seen that there was a reversal point here. So let's go ahead and plot that. Make sure we color coordinate it for our weekly level. And we've seen a bit of a reaction at this level, but price ultimately just broke through, which our key levels aren't always right. And what that means is that price can react to the levels, but price can also just break right through. So having our key levels on the chart gives us an idea of where price can react, and if it does react, we can have a directional bias in place. But price can also stall at a level and continue to break through. As to why we would want confirmation of bullish momentum coming from this area. So on the lower time frame, we may place a trend line here or something, or maybe find a pattern, and a confirmation through a break of the pattern would help us with our directional bias. So moving on, we notice a key level here. We see price come down and a reaction here. So let's go ahead and draw in a zone. Now, why do I draw a zone in here? Well, we can see that as price came to this area, because key levels are not strict prices other than a reaction around an area of price, and as price came over here to this area of price, we've seen another reaction with long wicked, inverse long wicked, and a bearish momentum candle forming. So this is a very key level, as we see multiple rejections trying to act as support, holding this level, which initially broke through, and price reversed and coming back up and getting rejected from this level, turning our old support into resistance. So as price comes down, we notice that there is a key level here as well. So let's go ahead and plot that. Now price came down and we've seen reaction from this very long wick and a bullish momentum, and price started to pick up momentum. So price came back down and we've seen a reaction from the same level, which ultimately price broke through. And now price is at a low that there isn't really much here. It is continuing to make lower lows and lower lows, and it is struggling to find support. So the only thing that I can do is plot a key level on our daily chart at the lowest point price has gotten. And if price continues to break below this level, then you know what happens. So let's go back to the weekly and see what we got. Well, based on the data that we do have on this chart, this is what we can plot. Now, all these key levels on the chart shows us areas where price can react if price reverses and continues to move up. We could see a reaction here, we could see a reaction here, we could see a reaction here, and we could see a reaction here. All these levels are valid and capable of a reaction. So that's all for today. I hope you guys got some value from this video. If you liked it, hit the like button and subscribe for more.